Okay. So question. Uh, let's see, this past Tuesday, I believe it was, I did a session and it was finding optimal day trades. I'm just curious if there's anybody here who was with me on Tuesday. Okay. Oh, Martina. Okay, Martina's here. Cool. Awesome. Um, I'll tell you, I got such good feedback from that. I think I'm just gonna do it again today if everyone's good with that. Like I said, I was originally planning to do the talking real life trading. Um, okay, cool. Martina's up for it. It was good, right, Martina? So anyway, let's just do that. This is thank you. Okay. So this is okay, cool. Drake, I am recording it, so I'll post it in Slack. So enjoy that run. Um, so what we were talking about on Tuesday, so we kind of jumped into it about finding optimal day trades, right? And that also evolved because it's all related, right? So analyzing the price action, understanding the sentiment of the candles, watching the volume, it's all tied together. So when I'm looking for a setup. And so real quick, Martina, since you were here, do you remember uh the exact kind of setups that I'm looking for? Not necessarily setups, but the price action. Do you remember those kind of key things that I'm looking for? I'll give you a second to see if you recall those. But beautiful. Yeah, exactly. Yep. Double tops, double bottoms, hammers, shooting stars. Oh, David Harris. Thank you. Okay. So David, you were here then Tuesday. Cool. Yeah. So I'm looking for when I am day trading, I am specifically trying to find some type of a signal for a reversal. And then I look to trade that. So I'm looking for double tops, double bottoms, hammer shooting stars, but all of that is also in conjunction with volume spikes. So I love to see a volume spike at the bottom of a move with a hammer, or top of the move with a shooting star. And again, the double tops, double bottoms. Those are all the things I'm looking for. So let's just jump in. I'm going to look at just several different charts. We're going to analyze the charts. We're going to look at the sentiment of the candles. So starting here with AMD. And this is today's price action, right? So we open up, right? And we open up with this, really big, just, kind of long lower wick. It's not really a hammer candle per se, but that's not what I'm looking for. But that immediately kind of sets the tone for the day. You go, okay, well, what is the sentiment of that candle? Well, at one point, that would have been a big bearish candle, right? So this long lower wick, to me, well, not just to me, but in general, that represents buying pressure, right? There's a lot of buyers here, right? At one point, this was a big, huge bearish candle, but then the bull stepped in like, no, we're not going bearish today. We're going bullish, right? So a lot of buying comes in, and then you get these inside candles, right? And so the other thing that I'm really in tune with are the bull traps and the bear traps, right? I wait to see if those occur, and then I'm looking for setups. So so you have here, right? So you have this candle, inside candle, inside candle. And so when I say inside candle, I'm talking inside candle to this first candle, right? So generally, okay, again, generally, it's the belief is that when you have inside candles, whichever way the price action breaks is the direction that price is going to go. Meaning, is we have the high of this candle and the low of this candle, and if we have inside candles, whichever way it breaks, that's the way price action is going to go. Now, that may have been really consistent in the past, but that is not consistent today. And whether it's the algos, the high frequency, trading, the computers, whatever it may be in AI, right? Now we're dealing with AI, but what do we get here? We get a break above it. And think about that, right? This right here, that's just a beautiful bull trap, right? Because if you go back to what I was saying about these inside candles, a lot of people would have been lined up here, right? They would have just bracketed this candle, right? Bracket it and look to go long as soon as it breaks. And what do? You get this break. And then of course, just stops it right here. And what happens? You get this bull trap, throws up this long upper wick, and then it retraces, it hits everyone's stops, and then it goes bullish, right? Just so typical with the way that trading is today. So also, all the reason why I don't like to take, and I always talk about this, I don't like to take breakouts or breakdowns. So I'm not that trader who is lining up here and taking a breakout, meaning I'm not setting a stop limit to enter at the break of that candle. What I do is I wait for the break to happen. I look for it to hold. Then I do a limit buy, right? And that's how I'm avoiding all of these traps, right? Because it's a classic bull trap right here. But let's just follow the candles, the price action, right? So what do? We get a bull trap. All these bulls that got in here at the break of this candle are now literally getting triggered in, and they're then getting taken out. Stops down here, 2 candles, quick, in and out, boom, done, right? So again, another classic trap, right? So now people are lining up here to go short, and then what do? You get this hammer, okay? So that's just kind of the sentiment in terms of the traps that I'm looking at here, right? And then you do get this hammer. Now, the one reason that this doesn't really qualify for me for what I'm looking for is look at the volume, right? You do get, and again, it's not like a classic hammer, it's hammer-ish, but you really don't get that volume. What I'm looking for is, if I look down, I want to see a volume spike, and I want to look left, and I want to see that volume exceed volume of the previous candles. And it doesn't happen, right? It's a nice candle, but you really don't get the volume. But then you do get the volume on this, okay? So let's just walk through again how I trade and what I'm looking for in terms of why I don't take breakouts and breakdowns. Again, I already explained right here. So this is a really good example of, I would not necessarily, again, this doesn't really qualify for me because it's not on great volume, but still it's a hammer candle at the bottom of a move. And then you get this candle, right? So when I see this and I see this candle, so there's my, instead of taking this breakout, but I said, I want to see price get above the level and hold. And that's a great looking candle, right? I think everyone can agree that that right there after this is a great looking candle. Okay. So where I look at trades is, okay, once I see that, and that's my confirmation candle. Okay, that, yeah, there was a hammer here, it wasn't on great volume, but then we got that candle, and that tells me the bulls are really here, right? I knew they were here back here. They gave up a little bit here, but this bounce right here. So instead of taking that breakout, again, because the majority of breakouts and breakdowns fail, all I'm going to do is I'm going to look at this candle, and I'm looking right through here, trying to find a level. I have this low here. I have all of these bodies lining up. I have the high of this hammer. And so all I'm looking for is doing some type of a limit buy, setting up a limit buy somewhere. Sorry about that. Let me jump back in here. All I'm looking for is a limit buy, and I'm going to set my limit buy. I'm always looking left, right? Even when I talked about the volume, look left. Well, candles, look left. And I'm just looking at the low of here. I'm looking at the bodies here. I'm going to find an area that kind of cuts across all of that. There's my limit buy. So get this big candle here. You get the pullback. Boom. There's the entry. And now you're off, right? So limit buy here, stop. And again, I don't ever put your stop directly below the candle. It's way too obvious. My stop would have been, I like to, especially with the funded account, you want to use looser stops. So my stop probably would have been down here, right? Again, I'm just ballparking it. I'm not looking at exact levels, but I'm just wanting to give you an idea of where I'm going to put my entry, where I'm going to put my stop, right? So it comes down here. This candle would have triggered me, depending on where I actually put my entry. Maybe this one would have, and then off it goes, right? could have been a nice trade. Could have gotten, you know, 1 point. Well, depends on how long you want to stay in it, right? But that could have been maybe a 2-hour trade up to here. Now, I should also mention that, you know, when I'm taking this trade, before I even get into it, if I'm setting this up, think about this. Once this candle broke out, right, I have plenty of time to set up this trade. I have plenty of time to set up my limit buy and my stop. Now, the next thing I want to do is I want to look at that and I want to go, okay, well, do I have, based on that entry and that stop, is there room for me to at least make, at a minimum, I'm looking for 1.2 by the high of the day, or a very strong overhead, you know, resistance level. And the high of the day is way up here at this point, right? But really, this is the area that I would have been looking at in terms of where it's good, where I would look to go, say, okay, can I get up to this level, right? That looks to me to be, that's more than 1.2, but that's the level, not way up here. High of the day, I'm looking at the top of these candles here, because again, right now, price action is right here, and it came up here, and this was the last pivot. So I'm thinking, okay, if I get into this trade, can I at least get to 1.2 or 1.4 by this pivot? And the answer is yes. So the trade sets up for me fine. That's good. So get into the trade. Now it's just a matter of just, you know, letting things work out, right? Just letting the trade happen. Yeah, correct. Yeah, so I'm currently on a 5-minute chart here. Okay, 5-minute chart, and you're right. So Martina, yeah. So what I do is when the market first opens, I'm using a 3-minute, a 5-minute, and a 15-minute. Okay, and I'm just looking at this all, just, you know, back trading it right now on a 5-minute chart. But yeah, I am looking at the 3, 5, and the 15 that early in the morning for sure. Yep. And so, you know, and so let's do that. Let's look at it on this flex grid here. Okay. So here's the 5-minute, here's the 15-minute, right? So 15-minute is right here. So it would have, you know, you would have seen this candle. So again, look at these, back to the traps, right? This can't, so after the first 15-minute candle, this candle did both. It did the bull trap and the bear trap all at once. Then you got this candle, right? And again, this was just another trapping candle here, right? And so when I'm looking at that, I go, okay, well, I've got a trap, and a third trap, right? And then, but, you know, with that long lower wick, again, this is buying, right? This is buying right here. It's really kind of anybody's, you know, it's like, yeah, you got this bearish candle, but you look at the wicks, right? This is representing selling and this is representing buying. It's pretty even, but then this candle comes in, that definitely is more bullish, right? You got this long lower wick. There's barely any kind of a wick up top, right? Yeah, and Albert, you know, and to your point, you know, if I was looking at this, to be quite honest, if I was watching this on the 15-minute and this was happening, I shouldn't say probably, I'll tell you, I would have canceled that order, right? I don't like getting triggered in on a big momentum candle like that. That's just me. So thanks for calling that out. Yeah, on the 15-minute chart, you know, realistically, if I was looking at this, so here's my 5-minute chart, right? So if I'm watching this and this comes up and then this is pulling back, but I'm watching it in live with this 15-minute candle forming, I likely would have just canceled that trade, because that is one thing I don't like. Now on the 5-minute, you know, these aren't as scary, right? Because it actually took 3 candles to pull back to that level. But yeah, on this that's just a big momentum candle. So good call out, because I probably would have canceled that trade. But let me go back, because the main thing that actually, when I was looking at this, wasn't necessarily this. I just wanted to show you that this could have been the type of entry that I would have taken, right? But what I really wanted to get to on this chart, which is exactly what I'm talking about in terms of what I'm looking for, when we started the conversation, is double tops, double bottoms, hammers, shooting star, etc., with volume, right? And great example. So again, I just wanted to show you how you could have played this if you had seen this and you wanted to get into it. Again, realistically, I probably would have canceled that trade just given the large candles, right? And I've said that many times. I don't like to get triggered in. I like to see a nice control pullback, not just big momentum candles. Yeah, scary. Absolutely. Yep. But this is what caught my eye right here. Okay. So look at this move here, right? So it comes up, right? You get all the sideways action, comes down, and then boom, right? Now back to this area here. All right. Previous resistance becomes support. That happened here. And it came down and this level held back here. And all that happened was this came up, came sideways. The bears try to step in and do it again. It came right back down to that same level. And that's what I'm looking for. That's what catches my eye. Hammer candle with volume, right? You can see that. So when you look left, and that the key part to this is, as I said earlier, when I look left, I want to see that this volume far exceeds volume, immediately to the left. And if you look here, I mean, that volume, this candle, right? That volume was about the same as this here. But if you look left, I mean, look at all this volume here that that's the spike I'm looking for with a hammer candle, right? And then you look at this and you go, okay, this one you could take, again, because I don't take breakouts, I might have, yeah, it's great volume, right? So you could, and again, feel free to take a breakout. If that's the way you trade your plan, not mine, right? But if you wanted to take this as a breakout, right, that hammer comes in, you see that hammer with that volume, and you also are realizing that this level is the same as this level here that held and bounced. All you're doing is setting up your entry there, your stop somewhere down here, and off you go, right? Now, let's, if I was looking at it in terms of a getting in on a limit buy, I would have waited for this candle to form, and then this candle would have triggered me in, right? So again, I'm just trying to avoid this next candle here being a trapping candle like this one was here, right? So this could be the limit buy. But now let's go to the higher time frame, right? Because let's double check it. So this time is 12:45. Let's see what it looks like on the higher time frame. So 12:45 is right here, right? So that, and again, look at these levels, right? Strong move up here. This is pretty controlled, right? This move back, again, all price did here was, this was the breakout level. Let me just drop this line in here, right? So when price came down here, right, and this candle formed, here's the breakout, right? And this, again, look right here. This could have almost been a classic bull trap. Look, the high, the high wick there, but then this candle came in, right? And there's your confirmation candle. Nope, the bulls are definitely there. Then this pulls back, and it's a nice controlled pullback. And then, so time frame wise, if I'm looking at this on, here's the, let me scoot this over. This 12:45 lines up with this 12:45. So when I'm going to that higher time frame, I want to see, does the higher time frame also make me think that this could be an area for a bounce and a place to go long? And the answer is yeah, right? And let's just, so that the 15-minute chart supports that. Now this is 12:45. So we'll get a little bit in terms of the 30-minute candles here. Zoom in a little bit. I'm sure it's a little hard to see, but 12:45, right? 12:40, that 12:30 was this hammer. 12:45 is so it's in between here, right? So again, supports it. You've got a hammer candle at 12:30, and on the 12:30, right? So 12:30 up to 1 o'clock, right? All that was taking place here. So again, that supports it. You have a hammer candle forming on the 30, right? You have the hammer candle here on the 5 with the volume. The 15-minute supports that, and the 30-minute supports that. So that's a great example of what I'm looking for in terms of the multi-time frame analysis, the hammer with the volume, and then all of it just kind of has to blend and work together. Any questions on that? Thoughts, comments? All right, let's go to another example. Yeah, Martina, what do you got? I'll give you a minute to type it up. While you're typing, I'm going to just get a drink of water. Hang on. Yeah, Sean, I'm recording it. Yep, no worries. It's being recorded. Yep, I'll probably throw it in Slack. If I don't get to it today, I'll put it in tomorrow. Okay, so Martina says, so when I try to back trade this, should I just focus on one of the things you look for or find? Look for them all, right? So look for them all, Martina. Look for the double tops, the double tops, double bottoms. Look for it all, right? Now, now here's also, right? Now, this would not have necessarily worked as a trade, but here's another like example of, if you look here, right? Here's a double top, and look at this volume, right? But it's not a shooting star, right? It's just a big bullish candle, and look at that volume. It's great volume, but it's a double top, but you're not getting any type of like yes, granted, price did pull back some here, right? But think about it, like with that kind of a candle, like how would you even trade that short and made any money on it, right? You couldn't. So keep in mind what I'm looking for when I'm looking for that double top, because this is the double top right here, and there's big volume on this candle, but that's not a shooting star, right? Albert, so the 30-minute, right? So it all depends, because a lot of times the 30-minute might be really early on. And so if the 5 and the 15 are showing me if they're in sync, ideally you want to see the 30, but sometimes, depending on the time, that 30-minute candle could just be forming, right? So, and obviously if you're looking at it and it just, let's say you're looking at it at 1 p.m., right? So that 30-minute candle is just starting to form. Yeah, look at the candle look at the 30-minute candle between 12:30 and 1, and look at it and see if that can help you make your decision. But ideally, I would like to see all 3 of them in sync. Okay, but sometimes that might be too early on the 30-minute candle for it to really be able to impact your decision. So anyway, hopefully that helps. If you let's take a look at Tesla today. So Martina, back to if you want to be looking at this and trying to back trade it, right? Just do what I'm doing here. Just pull up a chart, right? And zoom in on the candlesticks, right? Just zoom in on the chart and just scan down here, right? First, just scan the volume and look for volume and see where, okay? So again, this, okay, granted, this was not a like a shooting star candle, but again, with the volume, especially at the top and the bottom, right? When you're seeing that volume spike, it's something that should always just, make you go, wonder what's going to happen here, because you've got a double top here, right? Price came almost right up to here. And that's after this whole move, right? I mean, this is a nice move, right? And then you get this candle with this volume spike. And again, not an ideal candle in terms of, it's not a shooting star, but it is a double top with volume. That I'm not sure I would, necessarily trade off of that candle alone, but I would start watching to see if there was some indication that at this point I could maybe take it bearish. Okay, so let's just look at that, right? Let's just analyze this and think how we could play this. Okay, so one thing is, you could try to count waves, right? And again, keep in mind, waves are, in my opinion, subjective, right? People will often look at waves differently. Okay. And as I'm saying that, I'm just looking here, like, is this a 1, a 2, 3, 4, 5, right? That's one way to look at it. Let me just throw this on here, right? So you got a 1, you got a 2, you got 3, the 4 is kind of like that, and then you have 5, right? And again, the 5 can oftentimes be a long wave, right? So 1, 2, 3, 4, 5. Okay. And then what happens, all of you who are familiar with Elliott wave, what happens after the 5 count? Anybody know? After you get the 5? Yeah, you get a correction, ABC, right? Could this be it? A, B, C right here? Maybe a B, and a C. Yeah, makes sense, right? So if you are looking at this and you're trying to analyze this and go, okay, could there be a possible reversal coming up here, right? Well, you do have a double top. It's not my ideal candle for thinking double top in terms of, a reversal, because it's a pretty good, nice looking candle, right? It doesn't have a big upper wick. I would love to see a big upper wick there, but you do have that volume spike. Okay. And it's after it's made basically a 5 count wave here. And if it's happening there and I'm aware enough to look at this and count and go, okay, well, it's it could be, that could be the 5th wave. Now we're looking at a reversal, throw on the lines here, see that that's happening, and it's a double top and you got the volume. Again, you're just trying to check off as many boxes as you can to give you some support for your thesis that this could be an area where it could reverse. And it did reverse. It was a nice reversal. So you could, when you saw that, and again, the volume spike should catch your attention and should get you thinking, okay, what could happen here, right? And you go back, and that's when you got to just go back and analyze what's happened here. And look, that's a big move, right? From down here on this low all the way back up here to, basically the double top. It's a big move without any kind of correction. Well, then here's the correction. But let me remove these drawings real quick, and then we're gonna look at a different way. So one way to have looked at this in terms of looking for that breakdown would have been Elliott wave, right? You could have looked at that and said, okay, I think that's the 5th, and then we're looking for a correction. Okay. Now, another way to do this, and any of you who have, been with me, you know that I'm also a big fan of trend lines, right? I like to trade trend lines as well. So if I look at this and I go, okay, well, let me throw on a trend line here. There's that trend line. Okay. And I throw on the trend line here on the, and again, this is a 5-minute chart, throw on the trend line, and it comes down here and if it hit that, got that hammer there, okay, I might be looking this trend line and going, okay, I got the double top here. Again, not my ideal candle for reversal, but it did have the volume. So that could be exhaustion volume. Comes down here and it throws in, let me just zoom in a little bit. Throws in a pretty nice hammer right at that trend line. So if that trend line, again, that trend line is nothing more than its support resistance, right? So price is above the trend line. So that trend line should offer support. Well, one way to look at this is, okay, well, it came down through a nice hammer, and then you got this pretty nice also looking bull candle. It should continue up, right? That should provide support, and it should continue up. So then I look at that and I go, okay, but if this Elliott wave 5 count is done and it is looking for a retracement, well, then I can also look at this hammer candle and go, if that candle gets taken out, price is going lower, because at that point, if this hammer gets taken out, this trend line is broken, and then price should go lower. So one way to do this would be to take once this hammer forms and it came up here, again, if I'm thinking at this point that Tesla should provide some type of a short setup, I can look at taking a break below this hammer. Sorry, I need to switch my drawing tool. I can look to take a break of this hammer. So entry would be here. My stop likely would be, I wouldn't go all the way up here, because if this really is going to fail, it shouldn't get back above this level, right? Again, I'm not putting it exactly where I would, but you get the idea of where the entry would be. And actually that might be a little far away, but you get the idea. You're basically thinking that if this hammer gets taken out, it should go lower. And also the fact that that hammer is sitting right on that trend line, and that trend line, if this bullish move is going to continue, that trend line should hold. And it got broken, and it got, so boom, there's your drop. That hammer gets taken out, comes down here, and then it just continues to roll. So a lot of times, and when you miss a trade, right, and you're like, oh, I should have gotten in, I should have taken that, just hang in there, right? Throw some lines on there, count the waves, continue to look for the volume spikes, right? Look for, because setups will keep presenting themselves, right? You miss one, though, there will be another one. This could have been a nice, maybe a one had, depending on if you wrote it all the way down into the market close, right? Could have been close to 2R anyway. I did recently do a video. Is everyone here familiar with the market on close and the limit on close orders? Some of you might have been with me when I made the initial video, but then I actually ended up redoing that video. Tracy, I think Tracy is putting that together to put it out there. Okay, but so Albert says no, he doesn't. So you go, okay, well, getting out of this, right? Right at the so getting out of this right at the market close could be a stressful thing, right? Because especially if you don't want to hold, this is Friday, and let's say you don't necessarily want to hold over the weekend. Well, you can do what's called a market on close order that will. So let's say you're coming into the end of the day here, and let's say you did take the short, and you want to try to get as much out of this as possible. You want to, but you also don't want to, mess it up and possibly get stuck holding this over the weekend, right? For whatever reason, you don't want the overnight or over the weekend exposure for, risking some type of a big gap come Monday. So you use what's called a market on close order, MOC. And all that does is at the market, it will exit you out of that position at the market price. And so it's one way to guarantee that you get out of that position. You got to set it up. I know with Interactive Brokers, you have to set it up at least 15 minutes prior to the close. Okay. But you can set up the market on close order, and it will take you out of that position at the close. right? And it's basically stress-free, right? Because it's set up, you don't have to worry about like trying to time, watching the clock and trying to time it right to the very last, second of the market to exit the position. It will just do it for you. So, or let's say you get in this position and for whatever reason, it's working out nicely and you have to step away for whatever reason. You got to go pick your kid up at school. I don't know. I'm just coming up with, idea. And you think that, and you don't want to just exit it because you think that it's going to continue lower. Then you throw in that market on close order and that will just take care of it for you, right? Set it, forget it. And then you come back later and you see that, it got you out right at the market close at a pretty good level. So I'll have to check with Tracy and see when that video is going to be out and available so, and then the other one is the limit on close, which you set the price, but the market, again, just remember that the market on close is going to be at the market price. So you're not setting your own price. It's going to be as close to the market price as possible at the close. All right, I'm curious. Let's go back in, right? Because we were looking at this. Let's look at Tesla on the multi-time frame, right? So this is the 5 minute. Let's see how this looked. And if we go in the 15, right? Let's go back to the 5. Okay. Here's that candle, right? Here's that candle that I was looking at with the volume spike. Okay. And again, not the best looking candle in terms of reversal, but let's see what time it happened. 1:30, right? Well, right there, 1:30. Look at that. Okay. Sean, good question. I'm not sure if 8cap has that or not. I would have to check that out. When I did the videos, I was using Interactive Brokers as the example. So I'm not entirely sure about 8cap. It'd be nice, right? Because I think with 8cap, what is it, on Fridays, you actually have to be out of that position 15 minutes before the market close, right? You have to be complete. Yeah. So I don't think that 8cap would have that then, because you do have to be out of your position 15 minutes before the market close. But anyway, so you're looking at this on the 5 minute and you go, okay, well, big volume spike, but it's not an ideal candle. But then you go into the 15 minute and there's your shooting star, right? Double top, shooting star, 15 minute. And then you go, that's my confirmation right there. That is telling me, this says, okay, something's going on. This tells me that's exactly what I'm looking for. And look at the volume, right? Again, you look left and it's pretty good compared to the previous 45 minutes here, right? There's your spike, volume spike. And that upper wick, again, that upper wick represents, at one point, think about it, that would have been a bullish candle, right? That would have been bullish. But then the bear stepped in and they pushed it down. Here was the open. At one point, that would have been a nice, and then they pushed it down. There's all that selling represented by that upper wick. And then, you get the shooting star. So Martina, there's your shooting star with volume. Okay. So just another example of how you use the multi-time frame analysis to help you decide that, yeah, this is a good time to go short. Right. And however you ended up taking this, whether you just, you could have taken this on the 15, again, at 1:30 in the afternoon, you might just trade on a 15-minute chart, right? And just take this, just trade off of this candle alone. Or again, you could on the 5 minute use that, that trend line, trade it that way, but you do have the volume spike. Let's see what it looks like on the 30 minute. Okay. 30 minute. It's a nice doji, right? So oftentimes, right, you see a doji at the top of a move or the bottom of a move, and that is an indication that price is going to reverse. So you have 3 time frames here, right? This is the one that is going to get your attention, right? The volume spike, double top of the move, volume spike, but then you look into the 15 and the 30 and you go, yep, all 3 time frames are indicating that this is now a short. So Albert, there's a good example of all three timeframes being in alignment. That's perfect, right? That checks off all the boxes right there. Yeah. Yep. So let's see. Let's go to let's just keep going. And all I'm doing right now is Martinez. So when you do want to back trade it, all I'm doing is I'm just pulling up just tickers, and I'm just looking for those. So if we go back to Tesla, let's just see what the price action was like yesterday. Right? Let's see if anything jumps out at us. Right? So looking down here, yeah. So here's a great example of where it would not have worked out in our favor. Okay. So come down here, look at this. I mean, especially after this move here, right? And again, everything works in the market, just not all the time, right? So there are going to be times when you will look for these setups and it just doesn't work. Okay. And here's a prime example of when that would not. So if you look at this move here with Tesla, and look, I mean, that is a really strong move down here, right? You would think, okay, it's got to bounce at some point, right? It's got, and I'm not, the other thing you have to understand is when I am, doing this live, I'm also watching the futures. Okay. Whether you want to watch S&P, the SPY or the Qs, or the S&P and the, and the NASDAQ, whatever your choice is, I'm also watching the markets live as this is happening, right? So if the markets are just completely rolling, then, usually the individual tickers are just going to follow along. So I don't really know what the market was doing at this time, but if I were looking at this and I see that big of a move down, and I mean, just, it didn't even stop, right? Didn't even take a breath through here. And then I see that volume spike. And again, a hammer candle is a hammer candle, right? Doesn't, ideally, yes, I would want to see a bullish hammer candle there at the bottom, or at the top of a move, I would like to see a bearish shooting star, but it doesn't have to be like, I'm perfectly fine taking a bearish hammer candle and going bullish on it, if you get that volume spike. But here's a great example of, where this just would not have worked out. And I'll tell you, this is exactly how I would have traded this, and it would have ended up being a loss, right? Which is, I see this hammer, right? Bottom of a move. There's the volume spike I look for. Okay, great. There it is. Now, as I've already mentioned, well, actually, I don't know if I would have gotten triggered into this. So, again, the way that I trade, I would have so what I need to see is a strong close above this, right? This was a nice candle, right? After this one, but it wasn't a strong close above here. Like if I took that candle and I moved it up here, okay, that's more like it. So actually, I don't know that I would have actually gotten into this trade, because what I'm looking for here, I would have been looking for a strong close above this level, right? So if I could just grab this candle and move it up, right, so that the close was up here, then I would look to get in on a limit buy. And that actually did not, I would have waited. Now that I'm looking, I would have waited for a stronger close above. The close had to be above this hammer candle. Okay. So likely I wouldn't have even gotten into the trade, because I would have needed to see, let's say if this candle here, right? If this candle here closed way up there, I don't know how well you can see that. Let's see if, anyway, you get the idea, I think. But if this was closed strongly above this level, then I would have set up the limit buy. But none of these candles actually closed strongly above that low. So I need to close above this, then I set up my my limit buy. Let's see. Oh, let's go to here. This was one that I looked at. For solar. Okay, First Solar. Look at how many red candles there are in a row. Right? 1, 2, 3, 4, 5, 6, 7. Whenever I see that many candles of one color in a row, I'm already thinking reversal. Look for some type of a move out of that, right? Because, or some type of a bounce, right? Because nothing can just keep going down, that low. But look at, again, not an ideal, but we are going to go into the higher time frames. This would have been at 10 o'clock. Okay. So 10 o'clock, okay, you're not going to have a ton of data, certainly not with the 30-minute, but we'll check out the 15. But look at that volume spike, right? Look at the volume here as it made a new low compared to everything else. So the first candle is always going to have the greatest amount of volume, right? Just the way it is. So that was this candle right here, right? So the volume on this exceeded the first candle on the day, right? Look at that. Okay, maybe it was even. Maybe it didn't exceed. It's pretty close. Anyway, but you get the idea. This volume here, look left and look how this whole move was done on relatively low volume. Then you get this huge volume spike. Okay. And again, you start thinking some type of reversal. All right. Well, how do you play it? Well, this is a nice close, right? You get this really nice close. So in terms of, again, how I would look to play this, and again, we're going to go to the higher time frame, but just on this 5-minute chart, again, once I see this close, right? And does anyone know, let me zoom in a little bit, make it a little bit clearer. Does anybody know what this candle formation, what this candle is right here? Does anybody know? Jeremy likes this candle. It's White Crow. It's so one white soldier. Boom, Sean's got it. Yep, one white soldier. So what happened here, right, is price, this candle opens slightly above, the close of this one, and it closes above, right? So Sean, you got it, one white soldier, right? So knowing your candle form, your candlesticks is also going to help, because you'll see that and you go, okay, well, I got this big, huge volume spike at the bottom of the move, followed by a one white soldier. Okay, so how am I going to get into this? Well, again, because I don't take breakouts. Once this happened, I likely would have set up a, my limit buy probably would have been right around here. Right. And sometimes I got to wait for it to come back. And so really nice close comes up here, right? And as I already mentioned, just should always remember that previous resistance becomes support, comes out of here. You get this bounce. I don't think that would have filled me, comes up here, right? And let's say, it's easy to do this hindsight, right? After this came here and if that didn't fill me, would I have kept the trade open? I don't know. Probably not. Right. At some point, I would have wanted to have gotten filled on this. Right. So nice little controlled pullback. And then I would have liked to have gotten filled there. But so I'm just trying to be honest about, would I have kept this trade open to get filled in this one? Probably not. Okay. But let's just say, for argument's sake, let's say I did. Right. So this would have caught my eye. Right. Again, we still need to go to the higher time frames to look at it, but that would have caught my eye. And then let's say I did get filled on this. Okay. So those of you who were here on Tuesday, right? So my stop would have been down here, right? So I get filled in there. What do you think I do as soon as this candle forms here? So Martina, I know you'll know the answer. So yeah, Albert, if I get filled on, if I'm doing a limit buy and I get filled on a candle like that, and then that next candle, it closes above, my stop immediately is going right below this candle. Boom. So immediately I am moving my stop up. And why am I doing that? Well, I'm doing that because I crushed the entry, right? I got the perfect entry on a lower wick, and then price moved away, moved in my direction, right? And at that point, price shouldn't get back below there. Just shouldn't. So I'm just going to move my stop up, right? And then I would have to wait for it to come up here and make this pivot, and then I can move my stop up in here, right? But as soon as that happens, I'm moving my stop up into here. And so let's say price comes down and it, hits that. Okay, well, I've taken a small loss, a very small loss. I can always get back in, but I always, if I nail an entry like that, I'm moving my stop, because this hammer, a double, came down here and held, came up here, came back down, retested that same level and threw in a hammer and then moved away. Yeah, there's no reason that this level right here should get taken out. So I'm just gonna move my stop up. It's all about risk mitigation, right? Managing your risk, trying to minimize and always trying to lose less than 1R, right? Always do your best to lose less than 1R. Okay, let's take a look at this. This was 10 a.m. So let's go into the higher time frames. Okay, so 10 a.m. Let me zoom in here. So here's what was happening at the time. Volume spike, right? Come in here, 15-minute chart. 10 a.m. Look at that candle. It's a nice looking bullish hammer with volume. Right? Now, granted, this didn't rampage up, right? You definitely could, you're trading off the 5-minute, right? But you're just looking for the 15-minute and the 30-minute to be in sync with it. But same time frame, right? Here, this volume spike, and then you're getting this nice, beautiful looking hammer on the 15-minute, right? And with volume. And look at this. That right there, there's your bear trap. Everyone who was sitting back looking at this, and looking at these two and getting FOMO because they hadn't hopped in yet. And all of a sudden they're like, okay, it's just going to keep rolling. I'm going to put my entry. I'm going to go short down here, stop wherever. And what happened? Boom. It hits everyone's entries and then it just goes up. Classic bear trap right there. Yeah, you can be Martina. I don't know if I'm getting to your comment late, but yeah, trail your stop. I don't really have time. We've got 2 minutes before Robert Thompson is jumping in. But yeah, that the trailing stop. I mean, again, anyone who's been with me, listened to me, knows that I'm a huge fan of the 5-minute 2-bar trailing stop. It works wonderfully. That's my go-to trailing stop is to use a 5-minute chart. And it's a 2-bar trailing stop. Works great. Let me check. Give me a second here. I'm going to stop the share because it's 4:59. Robert might there. He is here. Look at that handsome face. Wow. Robert Thompson is here right on time. I'm going to promote Robert.
Shouldn't need to do that anymore. Oh, host. There, yes. Got it. Yeah.
There he is. Promoted Robert to host. Anyway, hope you all, thanks, Martina. Appreciate that. Albert, glad it was helpful. Sean. Yeah. So I will, for any of you who missed it, I will, process the recording. I'll get it posted in Slack and you can check it out. So, but I will turn it over to Robert. It's his time. Afternoon room.
Cool. Thank you, sir.
Have a great weekend.
You too. Take it easy.
See you.
Okie dokie. We are live. Let me share the